Assalamualaikum warahmatullahi wabarakatuh. We are from Group 3 in the Income Tax subject. On this occasion, we will discuss material about Income Tax Article 24. And the group members consist of Aisyah Wayuni, Salsabila Asri, and Ulaya Rizko.
Income Tax Article 24. Preliminary. There is a basis that a resident taxpayer is on tax on all income, including income received or earned from abroad, to ease the double tax burden that may occur due to the imposition of taxes on income received or earned abroad. This provision regulates the calculation of the amount of tax on income paid or payable abroad, which can be credited against the tax payable on all income of domestic taxpayer. The provision of Article 24 of the Income Tax Law regulates the calculation of the amount of tax on income paid or payable abroad, which can be credited against income tax payable on all income of domestic taxpayers. Foreign tax credits are made in the year when income from abroad is combined with income in Indonesia. Indonesia adheres to the ordinary tax credit method by applying a per-country limitation. Income combination. The incorporation of income originating from abroad is carried out as follows. First, income from business is combined in the fiscal year in which the income is obtained or accrual basis. The second one, other incomes are combined in the fiscal year the income is received. The last is combination of income in the form of dividends. In Article 18, Paragraph 2 of the Income Tax Law is carried out in the fiscal year at the time the dividends are obtained in accordance with the decree of the Minister of Finance. Example for income combination. PT Asik Banget really received an earned net income from domestic source in 2016 as follows. The results of business in Germany in the 2018 fiscal year is 700 million. In the Netherlands, he received dividend on his share ownership in ABC Corporation the amount of 1 million, which was derived from profit in 2012 determined by the 2014 GMS and only paid out in 2018. In the UK, dividends are obtained on 75% share participation in the F Corporation in the amount of 2 million. The shares are not traded on the stock exchange. The dividends comes from 2017 share profit, which based on the decree of the Minister of Finance is set to be obtained in 2018. Income in the form of interest in the second semester of 2018 of 500 million from Bangkok Bank in Thailand. This income will only be received in April 2019. Income from foreign source combined with domestic income of PT Asik Banget in 2018 fiscal year income is number 1, 2, and 3. Meanwhile, income is number 4 is combined with domestic income of PT Mandiri in the 2019 fiscal year. Tax credit maximum limit. In calculating the limit on the amount of tax that can be credited, the source of income is determined as follows. The first, income from shares and other securities as well as profit from the transfer of shares and other securities as the country in which the entity issuing the shares or securities is established or domiciled. The second, income in the form of interest, royalty, and rent in connection with the use of the movable property is the country where the party paying or being charged with the interest, royalty, or rent is domiciled or located. The third, income in the form of rent in connection with the use of the immovable property is the country where the property is located. The fourth, income in the form of remuneration in connection with service, work, and activities in the country where the party paying or burning it with the remuneration are domiciled or located. The fifth, income from a permanent establishment in a country in which the permanent establishment carries on business or carries out activities. Sixth, income from transfer of part or all of mining rights or tokens as well as a financing or a capitalization in a mining company in the country where the mining location is located. And the seventh, gains due to the transfer of fixed asset or the country where the asset remains. And the last is gains due to the transfer of assets that are part of the permanent establishment of the country where the permanent establishment located. Tax credit maximum limit. The maximum tax credit limit is taken which that allows among the following three elements or calculation. The first one, the amount of tax owed or paid abroad. The second one, foreign income, divided all taxable income, multiply PPH on all those subject to the tariffs of Article 17. And the last is the amount of tax payable for all of the taxable income, or in the event that the taxable income is less than the foreign income. Example for tax credit maximum limit. PT Cemara earned net income in 2018 as follows. Income from abroad is 5 million with a tax rate of 40%. Income from business in Indonesia is 4 million, then the total net income is 5 million plus 4 million is 9 million. The maximum tax credit limit is taken the lowest of the three calculation elements. The first one, PPH payable or paid overseas are 40% times 5 million is 2 millions. And the second one is 5 million divided 9 million times the 2 millions, and 250 is 1,250,000. And the last, income tax payable according to the tariff of Article 17 is 9 million times 25% is 2,250,000. Thus, the tax credit allowed is a 0.2 of 1,250,000.
Maximum tax credit limit for each country or per country limitation. If foreign income comes from several countries, the maximum limit of the tax credit is calculated for each country. Example for maximum tax credit limit for each country or per country limitation. PT Udayana obtained net income in 2019 as follows. 1. In country A, the income or profit is 2 billion rupiah with a tax rate of 35%, that is 700 million rupiah. 2. In country B, earned an income or profit of 1 billion rupiah with a tax rate of 20%, that is 200 million rupiah. 3. Business income in Indonesia is 5 billion rupiah. The calculation of the foreign tax credit is as follows. Overseas income profit in country A. Profit in country A, 2 billion. Profit in country B, 1 billion. Amount of foreign income, 3 billion. Domestic income is 5 billion rupiah. The total net income or taxable income is 3 billion plus 5 billion equals to 8 billion rupiah. Income tax payable according to the tariff of Article 17, 8 billion times 25% equals to 2 billion. The maximum tax credit limit for each country is, for country A, 2 billion divided by 8 billion times 2 billion equals to 500 million rupiah. The tax payable in country A is 700 million rupiah. The maximum tax credit that can be credited is 500 million rupiah. For country B, 1 billion divided by 8 billion times 2 billion equals to 250 million rupiah. The tax payable in country B is 200 million rupiah. The maximum tax creditor that can be credited is 250 million rupiah. The amount of foreign tax credit allowed is as much as 500 million plus 250 million equals to 750 million rupiah. Loss of business abroad. In calculating taxable income, losses suffered abroad are not calculated. Example, PT Fiscal earned net income in 2019 as follows. In country A, the income or profit is 1 billion rupiah with a tax rate of 35%, that is 350 million rupiah. In country B, earns income or profit of 3 billion rupiah with a tax rate of 20%, that is 600 million rupiah. In country C, suffers a loss of 2 billion rupiah, and income from business in Indonesia is 4 billion rupiah. Here is the solution. The calculation of the foreign tax credit is as follows. Overseas income profit in country A. Profit in country A, 1 billion. Profit in country B, 3 billion. Profit in country C, 0. Amount of foreign income, 4 billion rupiah. Domestic income, 4 billion rupiah. Total net income or taxable income is 4 billion plus 4 billion equals to 8 billion rupiah. Income tax payable according to the tariff of Article 17 is 8 billion times 25% equals to 2 billion rupiah. The maximum tax credit limit for each country is for country A, 1 billion divided by 8 billion times 2 billion equals to 250 million rupiah. The tax payable in country A is 300 million rupiah. Then the maximum creditable tax credit is 250 million rupiah. For country B, 3 billion divided by 8 billion times 2 billion equals to 750 million rupiah. The tax payable in country B is 600 million rupiah. The maximum creditable tax credit is 750 million rupiah. In country C, PT Fiscal suffered a loss of 2 billion rupiah loss. This cannot be included in the calculation of taxable income. This loss also cannot be computed as a foreign tax credit. The allowed amount of foreign tax credit is 250 million plus 750 million equals to 1 billion rupiah.
The next material is big changes of income abroad. In the event of a change in the amount of income originating from abroad, the taxpayer must make corrections to the annual SPT for the relevant fiscal year by attaching documents relating to the change. Because the information caused income tax to be underpaid, there is no interest penalty imposed on the deficiency. Meanwhile, if the correction causes income tax to be overpaid, an excess can be returned to the taxpayer after being calculated with other tax debt. For example, PT Global Prima in Jakarta earned net income in 2018 as follows. Penghasilan luar negeri dengan tarif pajak 20% 1 miliar rupiah, penghasilan dalam negeri 3 miliar, penghasilan luar negeri setelah dikoreksi di luar negeri 2 miliar, PPh pasal 25 600 juta rupiah. Lalu SPT 2018 penghasilan luar negeri 1 miliar, penghasilan dalam negeri 3 miliar, penghasilan kena pajak 4 miliar, PPh terutang menurut pasal 17 1 miliar, kredit pajak luar negeri yang diperkenankan 200 juta harus dibayar di Indonesia 800 juta, PPh artikel 25 600 juta, PPh artikel 29 200 juta. Such corrections, penghasilan luar negeri 2 miliar, penghasilan dalam negeri 3 miliar, penghasilan kena pajak 5 miliar, PPh terutang menurut pasal 17 1 miliar 250 juta, kredit pajak di luar negeri yang diperkenalkan 400 juta harus dibayar di Indonesia 850 juta, PPh artikel 25 600 juta, PPh artikel 29 yang sudah di-store 200 juta masih harus dibayar 50 juta. Terhadap PPh yang masih harus dibayar sebesar 50 juta tidak ditagih bunga.
So next is how to implement foreign tax credit. To carry out crediting of taxes payable or paid abroad, the taxpayer is obliged to submit an application to the Director General of Taxes atau Direktorat Jenderal Pajak, enclosing first, financial statements of income originating from abroad. Second, photocopy of tax return submitted overseas. And third, overseas tax payment documents. The submissions of the application for a tax credit that is payable or paid abroad is carried out at the same time as the submissions of the annual income tax return. I think that's all from our group material. Thank you so much for your attention.